Hey guys, good afternoon, everybody. Today is Thursday, September 12th. It is 1:58 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm gonna go ahead and set up this room real quick and we'll get started shortly with our session in a few. So let me just finish setting this up. Make sure everything is good here. And the live stream has been kind of laggy lately for some reason. I don't know why. Like it took forever for the YouTube to get up here. And last thing. All right, looks like we are good to go. So let me get this link sent out to you guys over here. Link is sent out. Post this all throughout too. And all right, perfect. So I'll get a few moments for people to make their way in. Hey, Jamie. Hey, Jamie. Hey, Daniel. If you guys have any questions, feel free to put them in the chat. I'll just wait for more people to come in because obviously we're just getting started right now. Hey, Madhu. All right, so people are joining in. As people join in, I'll just give it some time here. I'm actually going to send out the email for this so people can join from there. Hey, Hussein, how's it going? I haven't seen you in a while. We see you back here on the session. Yeah, no, definitely. It's been a while. It's been a while for a lot of people. Send out this email. Hussein, you look so fit. Yeah, no, I've lost a lot of weight since like last year. Been doing a lot of fitness competitions, so I've been losing a lot of weight, looking a lot better, looking a lot better, feeling a lot better. So it's been beneficial both ways. So all right, guys, looks like people are still, yeah, Medusa, glad we're finally getting out of these summer markets, right? Yesterday was pretty good. I mean, today was a little tricky, but there was volatility in the market, so it's good. I mean, the only issue I think with the increased volatility is just finding that consistency. Like the trade for today that we took, the breakout was good. So that obviously hit TP, but the where was that trade that we took earlier? The trade that we took earlier today, the market flow entry, that's the thing that kind of screwed us because I think well, yeah, obviously you guys saw our stop loss is just a little too tight. It's kind of hard to kind of like, well, I feel like we just got faked out. So anyways, the entry was right here for the market flow. It was with a 30 TP stop loss, so it wasn't necessarily a bad TP stop loss. I guess I could have waited for the next candle. The thing that I was worried about here was just I was worried that I was going to miss the trade, but I guess if we waited for the next one, could have taken the next one down there. But yeah, I mean, it was a fair loss. I think the stop loss was just a little too tight because yeah, if we push this up a little bit further, I think to the 40 or even the 40, I think wouldn't, the 40 would have barely survived that. So I think the ATR right there, which is a good thing. I mean, the ATR and the volatility is higher. It's just a little erratic, right? So the ATR right here was actually 45. So I would have used a 50 to 100 TP stop loss. And we just thought about this last minute. So this didn't really come into play until like after the trade was taken. But you can see over here, if we had a wider stop loss, just a little bit wider, we would have survived the move and we're pushed down to 100 points. So now that we know that, we can make adjustments for, the following moves. But sometimes you just have to take those L's with a tight stop loss to understand that, okay, we need to make a bigger stop loss. And we barely started moving it to 30 points. So we'll see how that plays through. But I'm glad that there is volatility and there is some direction. Hey, Sam, how's it going? All right, guys. So it looks like for the most part, majority of you guys are here who planned on being here. If you guys have any specific questions, feel free to pop into the chat. I only have one real question that was asked prior to this live session. It's from Ethan. So Ethan wants me to, or Max, Max, he wants me to go over some confluences that'll help with the liquidity push. So I'll go over that stuff. If there's anything specific that you guys want me to cover, if you want me to review some entries, or if you want me to review some strategies, or if there's anything specific that you guys are confused with or need help with, just let me know, pop into the chat. This group mentoring session is really for you guys. So whatever you guys need help with, I'll help you guys with it. If we have some free time later, I'm probably just going to go through my Forex pairs and I'm going to mark up, the zones here. And I'll kind of show you guys how I mark up the zones for the SR zones, basically to trade zone to zone. There's a couple examples here. If you guys want to see some examples, I'll show you. Otherwise, I'll just mark up the zones. Most of you guys know how the strategy works. I think the difference, or the only difference that would come up between people is going to be how do you mark up the zones, right? So I'll show you guys how I mark up the zones. Typically, I start on the higher time frames, but I think I can probably even start on the actual time frame, and then if I need some outer levels, I can always just bounce around from the higher time frames and get the ones above and the ones below. But all right, so let me just go over that first question from Max. I'll start off by marking up liquidity here. So let's just go back to this morning's session. So let's go over here to 6:30. Today was a little crazy though. So liquidity for today is a little tricky because we had this big spike here pre-market at 5:30. We had PPI, which is producer price index. It was inflation news. So we just had a bunch of like there was levels here, but they got knocked out because of this big spike. So it made it a little trickier than usual for liquidity, but I'll go over a couple confluences here. I'll just mark up liquidity and we'll just breeze through it. And then I'll just kind of give you guys examples for like what confluences to use. The main confluence, well, there's not really any main confluence. There's like a lot of different confluences that you guys can use, but I'll just give out, I'll explain like whatever stuff is like the obvious ones. Like I think B1 variations are pretty obvious, but then on top of that, you can use, there's a plethora of like things that you can use. There's not just one thing. There's so many different things you can use for your confluence. And I'll just go over them. I'll try to list them. It's just there's not one that's more important than the other. All right, so I'm just remarking liquidity from this morning, guys. If you guys are not familiar how I mark up liquidity, I pretty much start from the daily, drop down to the 4 hour, drop down to the 2 hour, 1 hour. I just go down like halves of each time frame. And then I mark up the untested high lows. So it's nothing really super special. I mean, I use my high low indicator, so it makes things a lot easier to find these levels. You can do it by hand, but it's going to be difficult because there's so many levels to look at. All right, down to the 10-minute. Now that we're done with the 10-minute, I will go down to the 1 minute. Okay, so let's just see if there's any liquidity pushes that get hit right here. So this one obviously got hit pre-market. I'll just use this as the first example. Or actually, we can't really use this as an example because that was the opening candle. So we'll skip this one here specifically, but we'll look at this one here. So see how price is coming back down? There's a possible opportunity for price to come down and hit this level of liquidity. The confluences that I would look at So there's a couple things here. I'll try to list them, but there's just too many things here. So we'll just look at confluences. And I'll call confluences to confirm direction. It doesn't need to be confluences for liquidity pushes, but just confluences in direction. So we'll kind of list them here. There's a ton of them that you can use. So one obviously is going to be trend. So trend using trend meter, trend using pivots, trend using momentum divergence. And I'll try to space these out. And there's no specific order here. So I'll not even list them by number. I'll just put trend. And I'll space it right there. Direction using momentum. Direction using pivots. Using pivots. So you can see there's I mean it's like it's the same concept. You're kind of just looking at direction, you're looking at trend using trend meter pivots, momentum divergence, looking at direction momentum using, I mean, it's literally everything is all the same. So obviously you could look for trend first, then you could look for direction, and then V2, or we do V1, V2, V3, CV, variations. V1, V2, V2, V3, CV. I'm trying to think what else is there. There's no like one specific thing that I can really point out. I guess I could just list these separately. Variation. Variation. So basically, these are like the main things that you can use. Let me go and just save this as a template so I could just pull it up whenever someone asks this question. So the main thing you can use is basically the trend. That's going to be like number one. You can see over here, price was bearish, obviously. And you can take, if you can like line these all up together or line these up to some extent, obviously you're gonna have more confluences. So identify the trend, identify the direction, identify a V1, V2, V3, or CV variation. And like the more confluences you have, the better it is that the more likely it is that it's going to hit. So for example, right here, we have a bearish trend, right? Trend meter is red. Using the pivots are also bearish. You can see all the pivots are below level 4, which is the red one. So you got two confluences right there. You have the trend meter, you have the pivots. Momentum divergence here isn't bearish. So that there as well. Or that isn't there. So you have 2 out of 3 basically for the trends. Using direction over here, there's no bearish momentum, so that's not going to fit. With the pivots, there is direction right here because you can see prices swinging below the pivots and the pivots are angling down. And then same with momentum divergence, that's also not there. So we have basically 2 confluences with regard to trend. We have 2 confluences with regard to direction. And then on top of that, we have a V1 variation right here. We have 2 patterns actually. So we have a V1 variation. There's a double body rejection right here off the higher high. And then on top of that, we have a CV variation, which is a consolidating variation. The reason for that is because we have this here, and this is a smaller candle. So this over here pretty much lined up everything. And looking at that, so we have 2 confluences for the trend. We have 2 confluences for direction. We have a V1 variation, a CV variation. So that's basically three confluences right there. You have all those three that line up, or basically two from each category. The odds of this hitting this level and continuing to push through is very likely. Right? You just put two and two together. You pretty much add up the confluences. You're like, okay, there's 6 confluences here out of this list. Is this going to hit? It probably will be. So if you want to do a 15, there's different ways of doing it. So the one way of doing it, and I'll show you different ways of, because I do it differently as well. The way that I personally do it is I try to get in a little earlier, like to like right here. Try to get in a little earlier. Some people like to get in a little later. So sometimes people will try to get in right at the line. Some people will try to get in before. For me personally, I like to get in slightly before so that when it does hit the liquidity, it usually blasts right through my TP. So there's all the confluences. Let's check the next candle if this here pushes through. So it does push through right, or it doesn't actually push through right there, not yet. So it doesn't come down yet. Comes back down right here, and I'll just leave this down here. I typically wouldn't go for a 30-30 on liquidity pushes. I'd go for like maybe if you want to do the original 10-30, you can do that. Or if you want to do a 15-15, you can do that as well. So price hasn't come down yet. And then you can see right there, it hits liquidity finally, and it blasts right through. So there goes an example of confluence for liquidity. Let's go over here real quick. See if there's any other examples. I don't think there's any more examples here. Or I guess there was one right here. So there's another one down here. Same thing. So same situation again right here. If you want to look at the confluences, the trend is bearish, pivots are bearish, momentum is bearish. There's a sell signal there now. So there's 2 confluences for the trend. There's momentum, there's pivots, and I wouldn't count the divergence. So there's basically 2 confluences for trend, 2 confluences for direction. The CV pattern is again right here. There's a CV and a V1 variation pattern. It's the same thing. It's about like 6 confluences right there. Odds of this hitting this liquidity and pushing down further, very likely. So price pushes down, goes right through, and there goes another win for a liquidity push. So yeah, I mean, there's no one confluence. So you guys can use this list if you like, but it's pretty self-explanatory. I mean, these are stuff that you should be looking for regardless, even if you don't have the confluences. Either way, you should be trading the direction of the trend. You should be trading the direction of momentum. Look at the trend meter, look at the pivots. The only main other confluence that you're not typically always looking at, but should be looking at would be the V1 variations, right? You just look for double body rejections off the highs. Because that's going to indicate a reversal pattern. And the odds of this pushing down lower following a reversal pattern are very likely. It's the same thing with like using momentum here, right? So like there's a sell momentum there. You see the V1 variation, same confluence, doesn't have to be only for liquidity push. This could be used for a momentum scalp, pivot scalp, even market flow. I mean, there's just a lot of different types of entries you can use, but these confluences are universal. So they work across the board, basically. So let's see. Okay, we're done with that question. See, Daniel said he took the 641 candle for a push down instead of the market flow at 640. Notice once it breaks the big retracement candle, it pushes down nice. Let's see, 641. Oh yeah, so you're talking about this one right here, right, Daniel? Yeah, so this one right here. Yeah, and also on top of that, this would be a high-low scalp. Yeah, so you're talking about this retracement candle though, right? So you're saying when it breaks the retracement candle, it pushes through? Trying to see. Because this would also be a high-low scalp. So on top of it being a liquidity, this would also be a high-low scalp for either here or right there. Because you got in at 641, which is this candle, right? And I'm assuming this is the retracement candle. It breaks past it, and then after this would be a high-low scalp. So you guys can see that a lot of stuff kind of just ties in together. Like the high-low scalp kind of lines up with like a market flow. There's just a lot of different things that you can use. Basically, you can use strategies as a confluence, or you can just use them as standalone. For me personally, I don't like taking V1 variations by themselves anymore. It's just because there's a lot of fake outs, especially in a directional market. So I don't like to use V1 variations as much. I like to use them as a confluence, but not as a standalone. But yeah, your entry happened right there at 641 right after. I mean, ideally, this probably would have been a better area to enter as well for a market flow. Not this candle, but the one after. Because I think this one came down as well. It came down and then it bounced back up slightly. So let's see how far it retraced up. I mean, same thing. If I use the 40 CP stop loss, it would have worked out a lot better than the other ones. Yeah, so Daniel said I put a sell stop at the bottom of the green candle at 641. So at 640, you put the, well, you're talking about this candle, right? Yeah, so here's one thing too that, and I don't want to put this as an official strat or like a strategy. It's just something that I've used before in the past. One thing that you guys can do is, let me go back to this candle here. So whenever you get a retracement candle like this, like say the trend is bullish, right? Or the trend here is bearish. So for example, the trend here is bearish. What I would typically do a lot of times is I would put a pending sell stop right here. I don't do it anymore, but I used to do this in the past. I would just put a pending sell stop there. So if price does come back down from the retracement, I'm expecting it to push right through. So for example, here price, and this only works when or actually no, not this one. So this only works when the low is new. So there has to be a very strong trend, and there has to be volatility, and there has to be direction. So for example, here there's a downwards trend. The volatility is pretty high. Price is moving in this direction. So you can see how price is coming down, but there's a low right here, right? So what I would do, and this is just something that I've done in the past, I don't like teaching this to people because it's a very risky way of trading. But if you do catch the market when it's actually very volatile and directional, it's super easy to catch these trades. So same with this one right here, like you were just saying, Daniel, the 641 candle. See how price comes down and there's a low right there? What I would typically do is I'd put a sell stop order like right at that low. And I would just catch it for a quick 10 points. You know, this is like our typical 10-30 split, right? Or like you said, you do 20-20-20, which is also very doable, or you can do 15-15. It's just really up to preference. I would put a sell stop there, and this is only when the market's directional. You can see when price comes back down, it blasts right through it. And then what happens here again? Same thing. There's a new lower low right there, sell stop right there. And it would come down, and if that one didn't fill, this one would stop out. I do the same thing again right here. You can see right there, it blasts right through. Again, right there, same thing. Just wait for it to keep coming down. But you have to only take this one or I would only take this when the market is very directional. So again, right there, it fills it again, another full TP. And I just keep doing the same thing. I just keep stacking up wins. Again, right there, another full TP. Price comes down lower. So same thing again with this green candle. There's a higher low right there. Another sell stop right there. Comes down, fills it, goes back to full TP again there. But I would typically use like a wider stop loss because for a trade like this, I would have to just have some sort of cushion. And I'm just looking for it to blast through and hit the next level. Because what happens when there's a directional market? So for example, right here, like I was just saying, you guys can see there's a directional market, right? How price is below the pivots are spread out. We have a sell momentum. Price just continues to drop from here. Whenever we have a directional market, this new lower low, it just keeps pushing down lower. So we have a new lower low right there, new lower low right there, new lower low right there, and then eventually it will retrace sometimes. Like for example, here it's retracing, but when it comes back down, it's going to establish a new low, right? New low right there, new low right there, and you can kind of just keep riding it as price goes down lower. Again, this isn't something that's for beginners. Like you'd have to know what you're doing because as soon as price starts to reverse, so like for example, here it starts to go sideways, Once it starts to go reverse, you can easily get trapped in the other direction. Or if you're smart about it, so for example, again, same thing here, but instead of down, you're gonna write it up. So like there's a new high right here, and then you just wait for that new high to get pushed up. New high right there, and then you just keep writing this to the upside. New high right there, new high right there. That's basically 3 entries back to back. 4 entries, 5 entries, 6 entries. So if you're doing a 10-30 split, you basically would have 6 wins right there, back to back. Maybe another win right there, 7 wins back to back. Because you can see that when it does push, it pushes. Like you'll have an opportunity to take like, like 5 to 10 trades. And then you take 1 loss and you're up like 10 wins and then 1 loss. So you have 100 points and then you basically lose 30 points, but you're still in profit, 60 or 70 points. It's a risky way to trade, but I mean, if the market's moving very heavily, it's very easy to catch those types of moves. You just have to have it moving directional. Gotcha. Okay. Yeah. So Daniel said once it closes green and retraces, he sets the sell stop. Yeah, that's exactly how I would do it too. But I would just follow it as it continues to push. Let's see. Steven said, Sean, when you enter the breakout, the robot didn't play sound. It did actually. So let me go over here. I'll show you. It plays sound because it has to play sound for me to enter the trade. Like if it didn't play a sound, Steven, I don't even think you were on the live session at the time. Because I see when you come in the room. So like see how I took the trade here and took profit? My top step always makes a noise. So I'll pull it up for you to see. Maybe you just didn't hear it, or because I know I heard it on my end. It's pretty loud. Let's see. Go here. So this is a live session from today. Let's go back over here to the open.
Balance to be fit.
I just want to see if it's playing because I'm pretty sure it plays. Steven. I don't think you came in kind of late.
So you got market over here. I'll just look for the next momentum here. I touched, I did. So we had a sell signal here, price broke below, bounce off the pivot right there. So those are market flow that happened over your pre-market. I'm not going to take that one. I'll just look for the next momentum here.
Timestamp so I can
as you guys can see here, the liquidity first level, 3, 2, and 1 market is now open. Yeah, price coming down right now currently.
For some reason, I don't hear it on here. Unless my thing is muted. Does anybody else hear the noise like when we take the breakout? Because I hear it on mine, it's pretty loud. I'm not sure if it's like just not catching on the mic, but it's pretty loud. It's the same noise as the other one. I mean, you shouldn't be taking this trade anyway, Steven, but let's see. I just can't remember when I took the trade. Yeah, let me see. I'm gonna try to listen for
All right, we got market opening up in about 20 seconds. I'll mark up the clean chart a little later. You guys can see over here from the SR screen. It's looking pretty.
Yeah, Jamie said
pretty solid, like it's inbound.
Some mornings she hears it, sometimes she don't. I think sometimes it doesn't catch it because the noise is coming from my laptop or from my actual computer and not from the laptop. The laptop's different because it's from the other side. But I mean, either way, I tell you I'm taking
it. Back up. So you got market opening up in 5.
So when I count down like that, Steven, I already tell you guys if I'm taking a buy or a sell. So you should already be prepared. You shouldn't be waiting for the noise. If you're waiting for the noise, it's going to be too late because by the time the noise signals, price has already moved in the direction.
4, 3, 2, and 1 market is now open.
Yeah, so it looks like it didn't play today, but normally it does. But either way, the breakout, it's not something that you can wait for the noise, Steven. Like you can't be a second late because you can see how price spikes here on open. That's the whole point of the breakout. The whole point is to take it immediately on open, like a second before. And I give you guys a heads up. So I think what you need to do is you got to pay attention. Like you can't just wait for a robot noise. I mean, if you're waiting for a roll, even for the market flow entries, I give you guys a heads up. I say if this candle swings back, I'm going to take the entry. You can't just wait for the robot to tell you, hey, Steven, enter this trade, because by the time it says that, you've pretty much missed the entire move. So I think that's why you get into the trades like really late, because sometimes we'll be in the trade and it hits TP and you're like barely getting in, and then you're asking what you should do, right? So what you got to do is you have to pay attention, Stephen. You have to pay attention to like what I'm saying. Because I literally give you the breakdown and I explain, okay, if this happens and this happens, then I'm going to enter into the trade. But the breakout's probably one of the easier ones to follow because it happens immediately on open. And I give you the heads up. So like maybe 10 minutes, or not even 10 minutes. I usually tell you like I don't know where I said it here, but I said it
For the opening
there.
breakout for the day, aiming for this to be possibly bullish. So when the market opens up in about a minute, expecting this to climb up.
So like you see that, Stephen, I give you a heads up like 5 minutes ahead of time. So like you should already know that it's gonna be a buy. And when the market opens, because I'll count down like 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. You should already be in the position. You can't wait for the robot to say order filled because it doesn't say order filled until way after. So by the time that happens, the breakout has already happened. So you should enter immediately on open for the breakout. But you shouldn't be taking trades that you don't completely understand. Like that strategy is still one that we're testing. I know it does do well, but you should be a little more familiar with like what happens before, taking the specific trade. I'm gonna step away for 1 second, guys. I'm gonna grab some water and I will be right back. So just give me 1 second. All right, guys, I'm back. So let's see. Oh, Steven meant the liquidity push. So no, the liquidity pushes aren't official entries because I don't take them myself. The only entries that are official are the ones that I actually take. I mark up the liquidity pushes and I give you guys a heads up when they happen, where you guys can just see them on the chart. But I don't necessarily I don't take them. So and there's no specific reason why I don't take them. I just don't take them because they just don't fit my criteria. There's so many entries that come up and a lot of times they just happen too quickly. And I'm doing way too much for me to take it. If you guys want to take liquidity, feel free, but I don't take liquidity because it happens too quickly and I don't have time to set up the order. Liquidity does work well, but it's a very risky strategy, obviously, because you got to pick and choose which liquidity you want to take. All right, let me go down the questions over here. So let me scroll up real quick. So Daniel's asking, do you think it can be done with even a TP of 1515? So personally, yeah, I think if you're taking that move, like the one that we just mentioned, Daniel, I think the tighter the TP, the better, because there's going to be so many opportunities for entry. The only problem that I'm thinking with like, taking something with such a tight stop loss is that you might get stopped out on a retracement. So, I mean, for me personally, when I used to apply that strategy that we were talking about earlier, I would use a 1030 because I want to have some sort of cushion there, right? So like we were just saying earlier, for example, the high-low type strategy, or not the high-low, but just price breaking the low. So for example, right here, I put the entry right there. You see how it blasts right through, but you have that cushion. So you have one win right there, another one right here, another win right there. See if it comes through again. Price comes back down, another win right there. For a strategy like this, I think you would need a wide stop loss. I know it sucks because we don't really want to have a wide stop loss like that, but you're going to be racking up wins pretty quickly. So for example, here we just went over how many candles passed. So we had 1, 2, 3, 4, 5, 6, 7. 7, 7, 8. So basically, like, so before the loss happened right here, this loss was because of retracement. Or actually, I don't even know if it was a loss. Let's see. There's a low right there. Okay, yeah, so this one retraced back. So there was about 8 wins here and 1 loss. If you're using a 10-30 split, you would have you'd basically make 80 points in profit and then you would lose 30, so you'd still be up 50 points. So for a specific strategy like this, or even like with liquidity pushes, because it happens so often, I would personally just use a wider stop loss. I know it's like something that a lot of people don't like to use because it's very risky, but it works, right? This is how a lot of our previous strategies were applied. We used to use a 10-30 split almost every time for the entry. We'd have a couple entries here and there that would just pretty much hit, and then when we have a loss, yeah, it set us back a little bit, but we had so many wins that it would just continuously work out, right? So for example, here, if we were taking like another strategy that I was looking at was like not even waiting for the like another version of market flow. So like say for example, here there's a market flow entry, right? So instead of using instead of getting in at the correction from the bottom, I would just get in at the pivot push. So like price pushes up, hits the pivot, comes down for a quick TP. Same thing again right here. Price pushes up, hits the pivot, comes back down, hits TP. Price comes back up, hits the pivot, comes back down, hits TP. So like you can basically stack up a bunch of wins here, like 3 or 4 wins here. So there's like 3 wins right there, another one right there. That's 4 wins. I'm assuming this is 5 wins right here. But this stuff only works when the market's moving directional, right? So you guys can see here how the market's moving super directional. This here typically will move, or this will work when the market's directional. It hasn't been like this during the summer, so you can't apply this type of strategy during the summer. Like this is something that would be applied, like say in the fall season. Like right now we're going into the fall season. So like you can see like from this momentum signal, there's like almost like 8 entries that came up. The negative risk reward sucks, but it works. I mean, it sucks if you lose, but if you just keep stacking these up, your TP will just keep getting hit every time. Like you can just have a pending order there, and then it just keeps getting triggered every time and then I think eventually here it hits again. So that's about 9 or 10 wins. Or actually, this would be done. It would have been done at this point. At this point, there's a buy signal. So right here, there was about like 9 or 10 wins. And then you would have hit your last win right here for the 10th win. And then you would just be done until another sell signal came up. Or if you wanted to write it the other way, you can just write it for a buy here now. So price comes down. Same situation, you just enter right there. You have your pending order waiting, 10-30 split. This actually works really good. I'm kind of tempted to give this a shot. Because, yeah, right here, then there's another sell signal. So now that the sell signal is back up, you just write it the other way. It's just having that cushion for the wider stop loss. And this, it's not like this is a bad thing because we've traded like this before. So if you guys have traded with me for the past, I think like, so we started doing the 10-30 split, I think about like 5 years ago. Basically for the past, we'll say, for the past 3 years of live trading session, we used to use a negative risk reward and it would work out perfect. It's just that you have to understand like when to use it and when not to. So let's see, because you can see here that like well, I mean, obviously I wouldn't use it this far into the session. I think it would only be good like maybe like the first 30 minutes or so, basically 6:30 to 7. So 6:30 right here until 7, you have a nice little push. Let's check the market from yesterday and see how they move between 6:30 and 7. So I think around that time too, the market was moving pretty directional. Like you have to do when the volatility is like very, very high. For one, the volatility is high, market's trending, and yeah. So the same thing works here. So let me go again over here, 6:30 to 7. Yeah, so like same situation. We had a sell signal right here. You basically just wait for price to come and touch the pivot. Like you just have your pending order just hanging out there. So the first one would have happened right there. Price pushed down again. Next one would have happened right there. That's 2 back-to-back wins. The next one would have happened right here. That's 3 back-to-back wins. The buy signal came up, so you just stop. That's 3 back-to-back wins right there. Here's the next one. Sell signal came up. So basically you would have like 4 back-to-back wins right here. And then you basically would be done. I think 7 o'clock would be the cutoff. I mean, if you wanted to keep going after 7, you could, but the volatility tends to die down after 7 o'clock. See, this is what I like about the mentoring sessions. A lot of people don't like, they feel like people shouldn't be teaching other people, but when you get on these mentoring sessions like this, it starts to spark my ideas because these are old strategies that they're still valid. And this is basically just like a variation to the market flow. Like market flow, we look for price to come up and then bounce back down. But for this, we're just getting right in at the top. So as soon as price comes up and touches the pivot, it just gives you immediate entry. It's actually pretty smart. Let's see. Daniel's asking, have you ever looked at the 3-minute on Heiken Ashi? When I'm trading Bitcoin, we would call it the 3-minute cycle. If the 3-minute color aligns with the trend, momentum candle it works very well. Yeah, I've tried the Heiken Ashi. I just don't like it because it's not time-based. So the Heiken Ashi, it looks good when it's like, and here's the problem, so you can't backtest it. So if you look at the Heiken Ashi, it looks good after it's happened, right? So I've tried to come up with strategies for the Heiken Ashi, and it does work well. The only problem is that like when you see these candles real time, well, the market's closed right now at 2 o'clock. I was hoping it would be moving so I could show you. I try to follow it real time, and the problem with it is that these candles aren't they're not based on time. So like the candle, it's based on the movement. So it's tough to just follow. I mean, it looks good after it's happened, but I've tried a lot of times and it hasn't really worked very well for me. So for me personally, I just don't I don't like to follow it specifically. Let's see. Daniel said he used to use a split. Yeah. So that's one way that I would recommend it. If you guys remember before, there used to be a strategy that we'd apply. It was a momentum scalp. So we would do, and a lot of you guys remember this. We used to have two charts next to each other. I don't know if you were around during that time, Daniel, but we had 2 charts that were next to each other like this. And I think you were around. It wasn't something we tried it out for a little bit and then it just didn't really work well because there's just too much going on. We had one hike on a sheet candle or one hike on a sheet chart next to it. And then we would only take momentum when it would line up with a hike on a sheet. Like for example, here we have a sell signal. The hike on a sheet was red. I'm like, okay, for sure, we should take that trade there. So there was a time period where we would take those trades. I mean, it could probably still work. It's not something that I necessarily use very often. So let's see. So for example, right here, there's a 941 buy signal. Heiken is green. That, now that we've talked about this actually works. It actually does work well too. So I'm glad you brought that up. Maybe it's something that we can use as a confluence for the main chart. So what I'm seeing here is and again, if you guys want to use this as a confluence, you guys have the tools here. So if you guys have access to my indicators, this stuff actually works I mean, it actually works pretty well. So I'm glad that you mentioned this, Daniel. I'm probably gonna have a hike on a sheet chart open somewhere, maybe side by side. And this is crazy because I didn't even think about this. Like this is something we used to do like way back, and it actually works really well. So like again, for example, we have a sell signal right here, right? This is a momentum scalp entry at 638, and you can see over here that it lines up with the hike on a sheet for a sell. So if you were to see that, and then you decided to take a trade at that point, I mean, it played out pretty nice. You could probably do a based off ATR. So the ATR here was, I think, 45. So you just bump it up to 50-50. And this would have been a good move. Okay. So I think I mean, we're having a bunch of ideas now. We'll probably have a chart open, just like a backup chart to line it up. So whenever we have an entry, I'll probably have an icon Ashi over here on the side. The thing with the icon Ashi is that it doesn't work well with the momentum indicator because it is they're both based off, direction momentum. So like it's based off the movement of the candle. So if you put two and two together, they're probably just going to overlap, but I mean, it's still useful. Yeah, Medusa, I miss these sessions. I know, me too. I feel like when we used to have these mentoring sessions every week, this was it was beneficial for us because we would always get creative around this time and see different patterns that were happening in the market. So I'll probably have these mentoring sessions weekly again. We used to be pretty on point with having these every Monday. So I think in the future we'll probably set a day and then we'll have these because now I'm getting a bunch of ideas. I'm like, okay, I could use this as a confluence for specific entries. And I'm like really curious about that. So let me just maximize this one real quick. So I'm really curious about that pivot bounce, basically a pivot bounce entry. Let me go back to Monday's market because Monday's market was a little messy for us. Let's see, Sam said open spread is very high. Um, how high does it get for you, Sam? Are you trading futures or are you trading indices? Because it doesn't really get very high for us. The spread stays at about like 1 or 2 points, sometimes 0 points. If you're trading indices or on like a different broker, I could see why the spread could get high. But for the most part on the futures market, it doesn't really get very high for us. Because we do take trades on open sometimes, and it doesn't really affect our entries at all. All right, so let me go back over here real quick. I just want to see if the market was moving. Okay, so same situation here. Market open here at 6:30 or 7. I think I would have avoided these candles right here because they're so huge. Yeah, these candles are too big. But again, right here, when this buy signal came up and it started to smoothen out a little bit, this is where I might have been looking to take. Yeah, actually, the entries were good here too. So the only downside with this is that you'd have to do it with a negative risk reward, which again, I don't think a lot of people are too comfortable with. But there's an entry right here that came down. So that's one. Price came back up, came back down right here. That's two. Price came down, came back up right here. And that's three. So looking at this here between 6:30 and 7, there's some pretty good bounces that happen here. So like there's nothing, obviously we don't take anything here, kind of wait for the market to stabilize a little bit, stabilize right here at 6:30. Between 6:30 and 7 is where the volatility is like the highest. And then once 7 o'clock hits, I mean, sometimes it stays volatile, but for the most part, it stays pretty flat. Yeah, so I think that'd be the cutoff. I'm gonna put this in my notes actually. Let's see, I'll just call this the momentum pivot balance. And I'll just test this. I know we'll have to test this during the live session because it's different when you're looking at it from it's different when you're looking at it from from here on TradingView versus or when you're back testing it versus seeing it during the live market. Let me just go back one more day. I don't think Friday would be a good day because Friday was NFP, but I mean we could still look at it just to see. I'm just a little curious to see how it moves over here. Man, I'm getting so many ideas now. We're gonna have to do this more often, guys, for sure. Because like I feel like I mean, obviously there's a bunch of ways to make money in the market, but I feel like we're not really tapping into all the other things because we haven't been brainstorming like this in a while. Okay, so between 6:30 and 7, buy signal right there, price pushes up. So there'd be like one entry right here. Price comes back, second entry right there. That also hits TP. And then the sell signal comes up. This looks like it would have hit TP too, because this one would have filled on this candle and then it would have hit TP here before we would be done with this, pretty much with this setup. And then now again, right here, 6:45, that buy signal comes up. We'd catch the bounce right there. That's the first TP. And then another one right here, second TP before we would be done. So there's like 5 entries right here, 5 entries, and then we'd be done by 7. Man, it just looks so easy. I'm like, why didn't we think? Well, I had the idea of doing this before, but I didn't really like. I think now that we're covering it during this mentoring session, there's more of a proof of concept. So I think the problem with me before is that I wasn't catching the bounce. I was waiting for the candle to close. And when you wait for the candle to close, usually the bounce is already done. So here, let me see the questions real quick. Daniel said, I was getting frustrated with the market flow, started noticing these entries. Would you be entering market on the pivot bounces? Yeah, or no. So I would have a pending order there. So what I would do is I would have let me look for another. Let's go back to the previous day. I'm just really curious now to check because it looks like it's been moving pretty smooth since from today up until okay, so this is Thursday. Thursday price comes down, comes back up. And we would have to watch the market too, guys. So like the thing with this here is like if I see this huge green candle, I probably wouldn't take the trade. I would probably be like, okay, this is like a big push up from this lower end up to here. Or just the fact that there's sessions around here, probably wouldn't mess with the entries around this point. Right here, there is a sell signal, price comes down, maybe take one right there, price comes back down, another one right there, price comes down, and then maybe another one like right here or so. But this is like in between sessions, so I don't think I probably would just skip this entire day. I think this day would just be no entries for me. So the way that I would enter this, Daniel, is I would just put a pending order. So for example, just say for example, this session wasn't here, right? So what I would do is, let me just replay too. So we're just gonna look at this. Like there's no session here. Let me just turn the session off so I can just use this as an example. What I would do here is see how the pivot is like right here. I would just put a pending order just chilling right there, just waiting. It'd be a sell limit. So this right here, um, this right here, the limit order would be there for a sell limit. And then basically I would just have it waiting. So when price comes up, it just automatically fills and then it hits TP. And that's what I would do. I just said that. So you don't have to worry about entering market because if you enter market, you might enter too late, right? That's typically what happens. And what I would do here is I would just put a line here so I can kind of see where I place my entry, and I'll just put the actual entry on my NinjaTrader. So again, right here, same situation. I would just have my limit order just hanging out right here waiting. So you can see again right there, it fills it, and then it hits TP right away. And then another one right there. Let's wait for it again. It fills it right there, hits TP right away. So that's like 3 entries right there already. You pretty much would just keep doing it until the momentum changes. Again, right here, another one. Hits it right there, full TP. Price comes down again right here. Technically, this would be another one again. So that's like 5 entries right there. Same thing again right here. You just have it waiting. That's like 6 entries back to back. I mean, these are going to be super fast though. So you have to be like, once it hits TP, you have to anticipate the next one. So TP, 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 another one right there. Again, another one right there. And then another one right. Okay, so this one right here would be the buy signal. We'd have another one just waiting there. And I would only take the bounce from like, you could put the entry at either at the green pivot, level 1, or in between level 1 and level 2. If it goes past level 2, I'm not going to enter at level 2. That's like you're kind of getting caught in the reversal at that point. So this one would probably be the last one. So your entry would happen here. There's about like 5 or 6 entries that happen here, and then one last one when the buy signal came out. At this point, this is your signal to like stop. You have a buy signal here. You're like, all right, now I gotta stop. And then it's about to be 7 o'clock. And at this point, you're like, okay, I'm done. Right. So you have basically 7 wins there at 70 points. No losses that I saw. And then at this point, the volatility starts to die down. So this is where you would just stop doing it because it starts to range at this point. So again, right here, price pushes up, buy signal, price comes back down. I mean, if you took this one here, would have lost, but it was it was already past 7 o'clock where this line is. So I would have just stopped. Let's see, WSF Classico is asking. Well, you retracted your message. I don't know if you're still there. I saw your message earlier. You were asking if we apply different strategies. So there's like 2 main strategies that we apply. There's the market flow entry, which is what we took today and what we took yesterday, and then the breakout entry. I mean, those are pretty much the 2 entries that we take pretty much every day. The stuff that we're talking about right now, this stuff is just we're just brainstorming. We're brainstorming. They're just little variations to the strategies that we already apply. So the market flow entries is like one main entry, but this is just another point of entry. For the market flow, typically we'd look for price to do something like this, where it would we have a sell signal. We would look for the bounce here, then we catch it as it comes back down. So it's the same concept. It's just the only difference here is that for this entry, you'd be waiting for it to push up and come back down for a 15-15, or let me see, the ATR was 35, so probably do a 30-30. So this is the same thing, the same strategy, it's just you'd get in later. Right? So right here you get in at like 30 points, or you get in once it comes back down, but instead of waiting for that, you just get in right here, like right away at the pivot with the pending order, which I think works better with this type of market because the volatility is a lot higher. So even if we get caught in a sideways move, like for example, here from 6:30 to 7, if price is going back and forth, you're only going for 10 points. So it's going to be, you'll have enough opportunity to get in and out very quickly. And the fact that you have a pending order there, it's going to be very easy to get in at proper price because you'll have a limit order. So that's another reason why I would prefer the limit order, Daniel, versus market. Because if you have your limit order like right here at the specific price, then it's going to enter you at that price. It's not going to enter you a price below or a price above. It has to guarantee that price. So that's why I know if it comes down 10 points, I'm like basically guaranteed it's going to hit. Not guaranteed it's going to hit, but if it does come down, I'm going to be getting out where I want to, not like lately. Like, so that's the thing that I don't like about the market flow is that if I put a pending order here, it's considered a stop order. So when you have a stop order, it technically is very similar to a market order. It doesn't give you the exact price, but it gives you somewhere nearby where you expected it to hit. So yeah. And I would probably use, so like another question here from Daniel, he's asking if I would only use the green pivot. Ideally, I would want to stick close to the green pivot, but I will go far enough to be in between the green and the blue. I just won't go past the blue pivot. Because when you get past the blue pivot like this, like you can see over here, it starts to reverse, right? If you can stay below the green or below the green and the blue, it typically will continue to bounce. All right, so I'm actually pretty excited to try that out. I'm gonna try it out for tomorrow's market. Tomorrow is Friday. We have news tomorrow. And there was one thing too. So Okay, so we do have some news tomorrow at 7. Okay, this is perfect. So we'll have our entries before the heavy news comes out. Heavy news comes out at 7 o'clock. So we basically take those what do I call it? Momentum pivot bounce between 6:30 and 7. Yeah, so momentum pivot bounce would happen uh it would happen between 6:30 7, pending order. I'm putting the rules here. Pending order at pivot 10:30 split. So I'll go back to my 10:30 for a little while. Just for now, just to see how this plays through. And then if we decide to make that our normal entry points again, I'll stick to that. So I think I'll do that with like maybe one account tomorrow. I'll just test it out, kind of play through with it, and then we'll go from there. The only way to really know if it works well is if we do it during live market. So I got to test it out during live market. I can't do it back testing. It doesn't work the same way. So, all right, let's see the other questions here. Hey Modi, how's it going? Modi's asking how our trading month's been. September's been pretty good. So last week was pretty good. We were net positive. We had, I think, 2 net wins for the breakout. So that's about like 200 points. And then we had a couple of our market flow entries. I think 1 or 2 entries that were net positive. So basically 2 wins from the scalps and then 2 wins from the breakout. So last week was pretty good. This week's been pretty decent too. So looking over here at our Discord, I mean, if you're ever curious, Modi, you can just pull up the official profits here, and then you can see the trades that we're taking. So we took this trade today, this one, took a small loss here for 30 points. The day before that, we took a market flow for 60 points that hit full TP. Took the breakout yesterday that also hit full TP. So we've had a pretty decent week so far. On Monday, we had one small loss here for market flow. The problem with this was that the stop loss was just too tight. So we've adjusted our stop loss yesterday and today as well. So we're no longer using the 15-15 fixed TP stop loss. We're using based off the ATR. So this week's been pretty good. This week and last week's been pretty good. Just in general, it's been overall good month for September. Let's see. Yeah, Samson normally it's fine, but I had sometimes heavy losses at open slippage anyway. Yeah, I mean, I could see slippage being an issue, but the spread, I don't think the spread ever gets really wide. I think it's just slippage. So yeah, no, I agree with you. The slippage is bad. Like when you trade on open, the slippage is bad because it spikes like 100 points, right? Like for example, this was, where's it at? And especially on a day where there's heavy news, like for example, this is today, right? 6:30. This candle is huge compared to all the other ones. So of course, yeah, you'll hit slippage if you take a trade. Like, yeah, look at this candle right here. Sam, this thing is huge. It's a 130-point candle. So yeah, the slippage is definitely an issue. 100%, I think slippage is an issue if you're going to trade on open. Normally we don't trade on open, but it's just for that breakout. So for that one breakout, I enter like 2 seconds before market open. So I don't get caught in slippage. Like for our entry right here, I got decent entry because I get in like a second or two before the market actually opens. So I don't really get slippage. I get in at like where we're supposed to. And then when it spikes, it usually pulls me out once it gets to that point. So yeah, if you do trade on open, I would recommend taking your entry like maybe 2 seconds before. Because if you get in right at open, you're going to get caught in some pretty bad slippage. It's just, it's something you can't avoid because the volatility is so high. And as soon as you click buy or sell, it's your broker's responsibility to fill that. And they're going to give you, if you hit market, they're going to give you whatever price. But if you have a limit order, they have to guarantee you that specific price. And that's why I recommend and why I prefer the limit orders versus stop orders and market orders. All right, so that's it with this here, guys. I think we covered this enough. I'm pretty excited to try this out tomorrow. I'm like really curious to see how it plays through during live conditions. Obviously the market's always going to be slightly different during during live conditions, but I mean, we'll give it a shot. All right, next question here is from Madhu. So Madhu's asking, can you analyze gold and possibly do zones on there? Let me know if you have any ideas or strategies that would you think would be good. So for let's go to gold. So for gold, Madhu, would you be trading? Would you be scalping? Or yeah, so what time frame would you want to trade on? I'm just curious because that's how I'll mark it up. If you want to trade on the higher time frames, you can go from like the 4 hour and higher. Or if you want to trade on the 1 minute, okay, 1 minute, it's fine. Perfect. So let's go over here to gold. Let's just replay to the morning again. 6:30. I think this probably works best. It's where the volatility is pretty decent. So what I'll do here is I will mark up the zones first. Let's do this before I do anything else. So we got this right here. The thing with gold is like gold is a really tricky asset. I feel like gold is more riskier than NQ. So I can't recommend any specific strategies since I don't trade gold. If I knew how gold moved, then I would obviously I'd have better options. But I personally don't, so I don't know exactly how it moves in general. So I'll look at the zone strategy. I think the zone strategy should work well because it seems like it works well with pretty much everything. I'm not sure if this will work well in the lower time frames because the thing is it's so erratic. It's not like it's not smooth at all like YM. So we got the 1 minute there marked up. I'll go on the higher time frames to get some higher zones. Here is the 5 minute loading up. I don't know if these lower zones are really going to be super relevant. I was hoping to get some higher zones, so I'll go on the higher time frame or an even higher time frame to identify the upper zone. So 5 minute, there's nothing above. 10 minute, I don't think I need to go on the like 1 hour or something. There's not even nothing up there for the 1 hour. Go on the 4 hour. I'm just looking for an upper zone because we have all the lower zones already. Yeah. Was gold at an all-time high today? That's crazy that there's no upper zones here. Okay, so this is where it becomes an issue. Uh, there's no way. So was gold at let me check. Yeah, no, if it's at an all-time high like that, I mean, let me go to a different asset. Let's go to GC instead of, okay, let me go on like the weekly. No, it's the same thing. Okay, so, okay, the strategy wouldn't work well for gold because I'm just shocked that it's this high. Gold is really that high right now? Wow. So gold is at the highest point since like 1975. There's Damn, that's crazy how high it is right now. Okay, so yeah, unfortunately, I don't think there's a way to really. I mean, the strategy would work, but you'd have to wait for it to actually pull back to retrace. So again, right here, this is just like how the zone to zone will work. I've marked up the zones from the 1 minute up until the 1 hour. You can see here, if you look back in the past, like, if it ever retraces back, you can see that it does work. It's just that like I would trade in the direction of the trend. So for example, here, if you're trading this, price breaks below the structure right here. I'd take this for a sell, of course. Ride it to the next zone down here. It's about like 170, do like 180. 180 for a 1-to-1. And then price breaks the zone again right here. So the zone to zone works on here pretty well. It's just for today, it just didn't really work because so far out. Same situation. So 2 wins right there. I would probably risk about 5% per trade, or maybe even less, 3 to 5%. This right here would have hit TP. This would have hit TP. Actually, I'm looking at a bad time. This is like at midnight. I wouldn't be if unless you're trading London session, then yeah, you'd be trading right here at midnight. But I trade New York session, so the entry that I would have looked for would have been this one right here. So this was at like 5:30 market open, or not the official market open, not NYSE open, but the US market. So technically the US market opens at 5:30. This would be the first entry right here. You can see that it's a longer hold. Now I'll just go back to here. So say for example, you're trading open right here, right? So let's go back to 5:30. If you want to trade pre-market, 5:30 happens right here. Price comes down a little bit, comes back up. So what you would look for here is the break and close past the structure. So right here, you can see how price breaks and closes, or it doesn't break and close. It breaks it, but not closes. This right here, it finally does break and close. There's a buy signal. The trend's bullish. Trend mirror is bullish. Momentum divergence is bullish. So you take the buy right here. Your TP would be super, super high because it's gonna be at the next zone. Is right here, basically 1,000. We'll just round it to 1,450. All right, so basically your stop loss is down there and your TP's down up there. If you want to tighten your stop loss, I mean you can, but I would typically go for a 1-to-1. If you want to make it tighter, then obviously you can do whatever you like. If you want to just have it below the zone right here, you can do that. So this would be like a 2-to-1 basically, if not more. And then you would just let the trade run. You just let it pretty much play out until it reaches the target right there. So that's where the target would be. And obviously it's TP. Let's see, market now opens over here at 6:30. So you look for the same thing again here. Same thing with the market structure. You just look for it to break and close past the structure right there. This is 6:36. Market is now officially open for NYSE. This candle breaks and closes above it. You have the buy entry right there. And then again, the problem with this here is that there's no ceiling, right? The ceiling is too high. So I would just probably cap it at 1,000. So you just do a 1-to-1 if you like. Then you let this run. And then obviously it plays through, or it goes back and forth for a while. But eventually it does hit TP right there. So, I mean, if you want to trade this, like I said, the zone strategy works on pretty much any asset. If you want to trade gold, if you want to trade Forex, if you want to trade futures, I think the concept works. It works universal. So it just depends on what you want to trade. So I guess if there was more zones here, you could draw more, and yeah, there ends up being more zones here. So let's see, price hits TP at this point. Let me zoom out. Sorry, guys, 1 second. So again, if you wanted to keep trading this past 8 o'clock, which is completely fine, it's just up to your preference, you would just draw new zones. So you have a zone right there. Zone right there. Zone right there. Zone right there. I would look for price to break down below. There's another zone right here. This zone gets spread out a little bit. So I would look for price to break and close again above that upper zone. It's right here, kind of gets spread out a little bit. And you can just leave the SRs on if you want. If you want to just leave the SRs on and make updates, or just turn them on when you want to make updates to the chart, like you can just turn them on like maybe every other hour or so. So again, right here, just looking for this here to provide opportunity for entry. All right, so here's like one opportunity right here. Price breaks below the structure. You can see price is now below the pivots. We have a sell signal right there. Trend meter is red. Momentum divergence is bullet is bearish. Right here, if you want to take a small little entry, you can take a sell right here because price breaks and closes below the zone. You ride this down for about, we'll say 100 points. Hits TP right there. So there goes one. And then again, right here, price breaks below it. Same thing. 191. And then it hits TP again right there. So you guys see here, this strategy is really, really good. I mean, if you know how to do it properly, this was one of the main strategies that we used to apply before. When I used to call signals, this was like the strategy. This is the only strategy I applied. You know, I made a lot of money. I made you guys a lot of money from the signals. And this works on pretty much anything. It doesn't have to be gold. It doesn't have to be Forex. It doesn't have to be futures. It can be whatever you want it to be. You just have to understand the logic behind it. And the logic is very simple. You're just looking for price to break past structure and then push down to the next structure, right? If you want to look for the break and retest, you want to be more careful, you can do that too. But the concept is super simple. You're trading zone to zone. It's just zone trading. You're waiting for price to break and close past the zone, push to the next zone. And then again, let's see if price ends up breaking another zone here. So I don't double dip into the zone. I'd wait for it to break past the next zone. So again, right here, same situation. Actually, I wouldn't take it, or actually I would. So like I said, I don't double dip into this zone, but price is now in this next zone above. So I would dip into this one here. Price breaks past it. TP's right there, about 107. We'll round it to 105. Let it run. Another full TP right there. You guys see how simple this is? It's simple, but not everybody gets it though. I mean, as simple as it looks, I know some people will screw this up. Steven, to be exact. Steven left there. I'm just messing with Steven. But yeah, there's always going to be someone that's going to screw it up, even though I try to make it as simple as possible. All right, so again, right here, price breaks the structure. I don't double dip into this one, but I would take the next one. And again, right there, it pushes right through. So pretty simple. I'm probably going to spend some time later today just marking up all the Forex charts because it's something that I definitely would be interested in taking, just on the on the larger scale. But now that you mentioned this, Madhu, I'm actually kind of interested to trade gold now. Yeah, because I mean it works pretty good. So I'm glad you mentioned this. Probably add this to my list of things to look at. Because we just applied we looked at all the gold entries right here on the 1 minute and they all pretty much hit. This one over here kind of took forever. This is basically the main entry for the one that happened after open, but I mean it still played through. But these yeah, if you wanted to trade it later in the session, it looks like it works perfectly fine. Gold actually looks better than YM for this specific strategy. I'm thinking now, what about NQ? I don't think NQ would be good because it's so spiky. But I am a little curious, so let's see. Actually, I don't really like NQ, but I'm just kind of curious to see if it works well. So you can, for the most part, just draw the zones here on the 1 minute. There's like not even any zones here. So I'm just looking at like where the zones are currently listed on NQ so here's the problem with NQ, because it's so choppy, you're not really going to get smooth zones like that. So if you look at the zones here, I'll just mark up the zones that you guys can see, but there's basically going to be no areas to trade in because of the Yeah, there's like literally no space here to trade. Because this zone takes up the entire, it literally takes up the entire it takes up everything. There's like no, let's go on the five real quick. I don't really need any upper zones. 10 minute. Yeah, there's not going to be much here to work with because the zones are so spaced apart that you're just not going to have any space here for any entries. Another reason why I don't like NQ that much. Yeah, so if you look back at it, I mean, there's entries here, but yeah, never mind. I take that back. I probably wouldn't use this on NQ. Okay, so the strategy doesn't work perfect on all assets, but if you're trading something that's smooth or works that moves decent, um, it'll probably work a lot better. So, all right, guys, if there's if there's any other questions, feel free to put them in the chat. I don't see anything else left here, but if you guys do have any more questions, feel free to chime in. Um, I would sit with you guys to mark up all the structure, but it's just going to take way too long for me to do all that here with you guys right now. I'll probably just do this during my downtime if I ever get bored throughout the day. I'll just go because what I'm going to do is I'm going to go down my list here. I'm going to rename this Forex Prospect Zones. This is my zones chart. Yeah, I mean, realistically, you don't have to go in the higher time frames unless it's like super necessary. You can just stick on the 4 hour. Well, for me, I'm gonna stick on the 4 hour for my Forex charts. Yeah, I'm kind of excited to go back to start trading Forex again. I haven't traded Forex um since I think post-COVID. For the past 5 years, I think all we traded was US 30. I mean, I still like Forex. I just didn't like being on the charts all the time. But I get kind of bored now, so I don't mind looking at Forex here and there. All right. So I'm just gonna finish this one up and then I'll probably wrap it up soon. If you guys have any more questions, feel free to pop into the chat. I'll try to do these mentoring sessions every week now, like we used to. I think it's been super beneficial because now I have an idea of what I want to apply tomorrow during the live session. I know I've been testing a lot of different stuff. I think I'll keep it to like maybe one breakout, maybe two scalp strategies, and then possibly the sessions entry. I just can't do too much during the live session because it's going to mess with my focus. I got to focus on like one or two strategies. And then one breakout's fine, like the breakout on open. I think that's probably the easiest one to do without getting too confused with everything else. All right. So I think that's it for right now. If you guys have any more questions, feel free to reach out. I think we covered all the specific questions that you guys asked. Let me just zoom through the chat real quick, make sure I didn't miss anything. Khan was asking, hey Sean, what's the success rate for the 100 points on opening? So we've only been doing it for about like 2 or 3 weeks now, Khan. I think 3 or 4 weeks now. The win rate is pretty decent. It's not great, but it's from what I've tested, it's supposed to be slightly above 50%. So it's give or take, it's depending on the week. This week's been good, last week's been good. It was probably like at a 60 to 70% win rate for this week and last week. The week before that, it was like at one win. So that's about like 60%, if not like a little less. But the strategy is based on the strategy is based on basically being slightly positive. So like the main goal for the breakout entry on open is to be like 1 or 2 wins per week. So you shouldn't expect too much. I mean, there's gonna be profit depending on what your risk is. Like for example, I'm risking about 1,500 per trade. So if I win 1 trade per week, I'll make like 1,500. If I win 2 trades, I'll make about 3,000. But then you multiply this across the accounts, like for example, you have 20 accounts, it adds up pretty nicely. So yeah, I mean the strategy is good. I mean it's decent. It's not a bad strategy, that's for sure. It's not a bad strategy, but we've only tested it for about 3 weeks, so I can't say for sure exactly how well it's gonna fare in the long term because we thought the same thing with the breakout V3. And the breakout V3, it was good while it was good. And then there was like periods where it just started to dwindle down pretty heavily. So kind of just depends. We'd have to see how it moves, how it works later in the year or like throughout different seasons. But all right, guys. So I think that's it for the day. If you guys have any more questions, feel free to reach out. Otherwise, I'm gonna wrap this up for the day. I got some stuff to do. Um, and we'll catch you guys back here tomorrow for the next live session. So, all right, guys. I think we're all done. So if you guys have anything to chime in on, just go ahead and hit me up on the Discord or chime into the team chat, and then we'll see where this goes.